Hello and welcome back to Dukascopy TV. I'm joined in the studio today by David Smith, author of the Geneva Business Insider, and we're talking European Commissions and the election results yesterday. David, thank you so much for joining me.
It's a pleasure to be back. Thank you very much.
Now, we can't not cover the election results that happened yesterday. What were the reactions in the stock market to these results?
Well, the immediate reaction was a sell-off where the market dropped about 3%. And at the same time, we saw an increase in the price of gold and silver and precious metals. I mean, this basically is giving a message that the market is not very happy about the likelihood of Obama's strategy carrying on for the next 4 years. This is going to cause a great deal of money printing and a great deal of difficulties and uncertainties in the market.
I wanted to come on to money printing actually. What do you think, having President Obama carry on for another 4 years, what will this do for money printing and as well, if you will, the fiscal cliff?
Well, I think money printing, you should start buying shares in money printing companies because the amounts that are going to be printed are running into many, many trillions of dollars. I think if we looked at what happened yesterday with the movement in the stock market, some people have been attributing that to the fiscal cliff, but I don't think that has anything to do with it. I think the fiscal cliff has been an issue that's been there and priced into the market for a very, very long time. And what we're seeing is a reaction to the Obama versus the Romney view of how to solve the problems that we have today. The fiscal cliff, obviously $600 billion coming out of the system would create a massive, massive collapse in the marketplace. And I think it's pretty clear that the combined efforts of Mr. Bernanke and Mr. Obama will ensure that there isn't a crash, whether it's done by fiddling the fiscal cliff a little bit and printing yet more money through the central bank. That remains to be seen. But I'm sure the fiscal cliff will turn out to be a false problem at the end of the day, because nobody can actually bite the bullet and assume the consequences of actually letting it happen.
And how much do you think that European economies are really affected by who's in the White House? Will Obama being here for a second term really affect what's happening in, say, Germany and Spain?
Yes, I think so. I think the whole question of money printing and the general strategy has been driven by America. You know, we're seeing the ECB wanting to print money. We're seeing Germany trying to resist it. We're seeing the intervention of Mr. Obama and Mr. Geithner to try and push by whatever means that everyone joins into this great debasement strategy of destroying all the currencies by printing as much money as possible. So there's a very direct influence there. If the US went into recession, a severe recession, because I think at the moment in reality it's in a disguised recession. If it became a severe recession, then obviously that's going to affect many companies around the world. It's going to affect Europe because American companies are going to be cutting back on their investments and squeezing margins and laying off people. So the two continents are completely interconnected.
I see. And yesterday we saw the European Commission cut its expectations for the Eurozone, even saying that the Eurozone economy will be virtually flat and grind to a halt as of next year. How much would you agree with this? And when do you think that we'll see these kind of difficulties start to lessen?
Well, I think it's been patently obvious for a long time that the only direction of any revision that would be made would be downwards. There is absolutely nothing to make one assume that the revision would be in the other direction. You're looking at economies like Spain, Italy, Greece, Ireland, these countries, Portugal as well, these countries are all in very, very severe problems. So you cannot magically get growth out of it. No matter how much money you print into the system, it doesn't actually generate growth. And if you go back to America, you know, where you're printing $1.5 trillion a year, which is getting on to 8% of the GDP of the US, you're seeing 1% growth. So there's no reason to assume in Europe, if we're printing money, which is basically just used to buy bad debts of the banks and government bonds, that it's actually going to have any impact whatsoever on the actual growth within the economy.
I see. Well, David, thank you so much for your insights. Just before you go, I have to ask you the Dukascopy question, which is a question we ask all the guests that come into the studio. And the question is, if you had $1 million to invest in the market for 1 year, where would you put it and why? So these are your options here.
Do I get a prize if I get the right answer?
No prize,
No
sorry.
prize, okay. Real estate, equity, bonds, gold, cash or oil? I think my money would be on gold because I think real estate is already in a bubble and it's very difficult to reflate a bubble that's bursting in most places apart from the absolute top end of the markets. Equities, I think the same thing. Money printing will help support them for a bit, but it won't actually make it grow. Cash, you're losing money all the time because of inflation. Oil is completely politically and warmongering driven. So I guess I would put my money in gold. Now I think the reason for that is because if you take a graph and you show the increase in debt, for example, in America, the level of national debt, and you compare it to the price of gold, the two are completely in sync. So if what you're talking about is over the next 4 years, Mr. Obama printing another $8 trillion, I think there's a fairly good chance that gold is going to go up maybe 10 to 20% per year, despite the intervention of central banks and others to try and depress the price of gold, to make people think that the best place to have their money is where they would like to herd you into like sheep, which is buying equities.
I see. So gold is your answer?
Gold is my answer.
Thank you very much, David, for your insights today, and thank you for coming into the studio. It's
been great to see you again. Thank you.
That's all from us here in the Dukascopy studio, but to keep updated on all the latest insights, just go back to the Dukascopy website. Take care.